Imagine stepping into an investor meeting, knowing every weakness they've identified in your business model, and having the precise data to counter their skepticism. Modern fundraising has evolved into a high-stakes competition of financial modeling, narrative precision, and exhaustive due diligence that can overwhelm even the most prepared founders. While many founders still rely on a pitch deck and a hope for a good feeling, institutional investors are shifting away from intuition. They are increasingly outsourcing decision-making to automated data models designed to predict success with mathematical certainty. Firms like EQT use multivariate time series transformers, or TMTSC. These deep learning models ingest a company's historical data to generate a single quantified probability of success. Scanning signals across revenue, team dynamics, and funding velocity, these models filter out 99. Because investors are now using these algorithms to find reasons to say no, founders must use the same technology to perform their own readiness audits. If VCs are using deep learning to find your flaws, you have to find them first. A significant number of venture capital rejections happen before a founder even begins to speak, and they often have little to do with the actual quality of the product. Many rejections are triggered by structural mandate mismatches. Venture funds are frequently bound by legal agreements to invest only in specific regions, certain stages of growth, or minimum check sizes. There is also the legal hurdle of portfolio conflicts. If a VC already holds a board seat at a direct competitor, their fiduciary duty to that existing company makes it impossible for them to invest in you. This creates a strategic rule: never pitch an investor who has already backed a rival. Most top-tier firms will immediately end the conversation to protect their current assets and avoid a conflict of interest. Even a perfect presentation fails if the fund isn't legally allowed to sign the check. This makes AI an essential radar system for targeting, filtering your list for mandate and portfolio alignment before you ever start the outreach. Once targets are identified, founders are now utilizing curated libraries of over 135 specific AI prompts to simulate a high-pressure interrogation from a skeptical venture partner. Rather than using AI for generic writing, sophisticated founders use it to stress test the core logic of the business, searching for the same inconsistencies an institutional investor would find during diligence. You can prompt a model to conduct a founder market fit audit, challenging the narrative to ensure the team's background justifies their ability to solve the problem at scale. By running a unit economics review, AI can simulate rising acquisition costs against your margins, identifying the exact point where your math no longer supports venture-scale returns. This culminates in an AI-generated pre-mortem. You are asking the model to list the 10 most likely reasons an investor will reject a deal, allowing you to fix those vulnerabilities before the first meeting. It is important to remember that while AI can polish your strategy, it cannot manufacture customer demand or replace the deep domain expertise required to actually lead a company. These models are most effective when they surface the critical, uncomfortable questions that force a founder to build a fundamentally more resilient organization. Successful fundraising relies on knowing exactly which questions to ask. The AI is simply the tool that ensures those questions are asked and answered before the stakes are real. While an algorithm can process historical data and format a narrative, only a human founder can provide the vision and conviction that makes an investor willing to take the final risk. Leverage AI to rigorously challenge your assumptions. If you can survive a simulated interrogation from a machine, you are much more likely to survive the reality of the boardroom. To bridge the gap between a raw idea and a funded company, we've developed the VC Funding Blueprint Kit for $497, a complete system for building an investor-ready presentation. The kit includes a professional 16-slide pitch deck in Canva, a financial narrative engine that helps translate your metrics into a story, and a comprehensive 16-page guide explaining every slide from an investor's perspective. You also get 16 high-leverage AI prompts specifically designed for each slide and a 10-slide B2B sales deck. There are no recurring fees, and you receive lifetime updates for all materials. Visit the link in the description to secure the kit and subscribe for more breakdowns on AI and venture capital. AI provides the leverage, but the right questions provide the advantage.